Welcome to the January 9th, 2023 Advanced Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, dedicated to helping you make great decisions in the new year. I'm also president, McGowan Group Asset Management, a team of 10 portfolio managers, financial professionals, each of us dedicated to the success of the affluent families that we serve. Go to NetWorthRadio.com if you'd like to set a time for your brainstorming session to update your plan for 2023. We want to empower you and your family with great decisions and more effective allocations. We'll put that into a plan for you. It just takes about an hour. Here we go. This is S&P 500. Over the past year, it's no secret that this was a miserable year in 2022. 2023, well, something happened on Friday and there was a huge spike in the markets, which puts the S&P up plus 1% for the first trading week of this year. 223,000 net new jobs added to the economy in the month of December, bringing the unemployment rate to a historically low 3.5%. There's nothing wrong with that. I keep hearing the word recession. So we're actually going to dive into the real numbers, what the forecasts are for 2023, and the numbers we should be paying attention to. Friday's rally says that the interpretation of the markets, at least, if the jobs market had been too good and too many people got jobs, that would have been bad because the Federal Reserve would then jack up interest rates even further because they seem to think only about 100,000 people net new jobs should be created each month. Well, if it was too cold, everybody would scream recession again because you've been seeing that in the headlines. Well, let's cut through the headlines with some facts. Here we go. Energy sector, 1 year performance, 48%. That compares to the S&P over the past 1 year, which is down about 18%. Well, that's some huge outperformance from the energy sector. And of course, that is one of our allocations. Not a recommendation until you actually get a plan from us, but great inflation hedge, good income, rising cash flow, and the potential for more appreciation. The global energy crisis is all hands on deck. Everything from solar to natural gas, and this sector still way undervalued. Here we go with the economic question. All right, when I first did this a few months ago, or a couple of months ago, real GDP for the fourth quarter was estimated at 0.2%. That's way down here, 0.2. Okay, it's come up to 1.1, but the Atlanta Fed updated their real read on GDP right now, and they call it real GDP now for some reason. 3.8% is their estimated growth for the quarter. That could be huge compared to what the expectation started, well, 0.2%. If that's true, that means a lot of companies made a lot more money than expected in the fourth quarter. And they're going to announce it in January and February. That could be positive surprises, just like the Dow skyrocketing 600 points on Friday. There will be some positive surprises this year. And here's the GDP numbers going forward. I'm going to go by quarter, okay? 0.1% first quarter, minus 0.6%. Everybody would scream recession at that, but we already had a recession, right? The first half of 22, we had negative real GDP because inflation it grew more than the dollar growth of the economy. Hot inflation. Well, we got inflation coming up next week, by the way. 0% growth for the third quarter of 2023. These two could fulfill another time the official definition of recession, just like we did back here. Wow. That means you can have a recession and you've already gone down enough in the markets to accommodate one. And then growth accelerates to 0.9, 1.5, and 1.8 normal growth by the middle of 24, according to the learned Bloomberg economists who were way too pessimistic about the fourth quarter. That tells you something. Low expectations are the key to happiness. Well, that's a funny joke, but what it's saying is People don't expect very much for this next year. And positive news would be a surprise because everybody's so negative. Well, if you have great assets that are undervalued, that could be a nice profit. So what's the plan until then? Through the rest of this year, and let me show you something about this year. This is earnings, okay? So here's my plan. Here's where we are on the earnings schedule. And earnings did go down right here. They're forecasting earnings could actually come in right about here for the S&P 500. What does that mean? Well, that would be like a 10% or more reduction. Most pessimistic is down here, right about here. Okay, so let's say that things are ugly in the first half. All right, you know, if profits are down, I can see that. By the way, it happened back in 2018 to 2019. Profits went down 10%, but the market took off like a scalded rabbit after the Fed stopped raising rates. Well, their next meeting is February 1st. They're at 4.5. They might go to 5. Well, the markets already know that. And they're pretty close to finishing this off. Wow, think about that. So what do we do in the meantime? Profits could come in down. That could be bad for valuations. Yes, the Fed's going to raise rates. Yes, there's talk of a recession. But if you have a basket of great assets paying real cash flow, and you simply take that cash flow, gain more advantage, improve the portfolio during a sloshy, ugly market, might be down 10% at some point. Well, when the pressure comes off and that growth starts to reaccelerate, if it does, then you could have a huge gain, but you've got good cash flow in the meantime, gaining advantage for the future in great assets. That's the plan. Now, here, I just want to give you the last 90 days. Who performed and who didn't in the S&P 500. Tesla was the worst, minus 56% in 90 days. That's an ouch. Oh, and so here, and this is updated for Friday too. Generac, they make the generators. Solar's going to take their business away. Albemarle, that's a mining company for lithium. They were down 22%. Signature Bank. So here, Universal Health Services up 61% in 90 days. Boeing was up 55%. Freeport-McMoRan, the mining company, up 39%. General Electric is back apparently, 38%. Moderna had a nice bounce, 37%. Caterpillar up 37%. Nike up 36%. In other words, the consumer's not dead. Those are some pretty good reads on the fact that not everything is negative. And if you look for great assets, we can help. McGowan Group Wealth Management, go to networthradio.com. Thank you for tuning in. Be sure to subscribe. And if you're retiring, you want one, McGowan Group on your side, but also you want your kids watching the YouTube so they'll learn something. Thank you for tuning in. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss, at networthradio.com. You can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.